Wall Street isn't just a place in New York. It's where the heartbeat of American money lives, and two giants run the show, the NYSE and the NASDAQ. Think about it. Every time you hear Dow Jones up or tech stocks down, it's these exchanges deciding how much your 401k, your retirement dreams, and even your kid's college fund might grow or shrink. For most Americans, the stock market feels like this mysterious machine where some people get rich while others lose it all overnight. But the truth is, once you understand how NYSE and NASDAQ work, you'll see that they're not just gambling casinos. They're actually carefully built systems that influence your financial life every single day. And today, I'm decoding how these exchanges literally decide the fate of American investors like you and me. So, let's start with the basics. What exactly are the NYSE and the NASDAQ? The NYSE, or New York Stock Exchange, is the oldest and most iconic exchange in America, home to giants like Coca-Cola, JP Morgan Chase, and Walmart. This is the exchange most people picture when they think of Wall Street, with traders shouting orders on the floor and the famous opening bell each morning. On the other hand, the NASDAQ is younger, born in the 1970s, and it's completely electronic. No shouting, no trading floor, just screens and algorithms. NASDAQ became the go-to place for tech companies like Apple, Microsoft, Amazon, and Google. Which is why whenever you hear tech stocks in the news, you can bet they're talking about NASDAQ. Now, why does this matter for you as an investor? Because the NYSE and NASDAQ represent two different worlds of opportunity. The NYSE is where you find the stable, old-school companies, the blue-chip stocks, that pay dividends and are considered safe bets for retirement portfolios. Think about your grandpa buying shares of General Electric back in the day, or Warren Buffett loading up on Coca-Cola. Meanwhile, NASDAQ is where growth happens. It's where companies might not pay dividends, but reinvest their profits to grow bigger and faster, giving investors the chance at huge gains. If you want stability, you look at the NYSE. If you want innovation and risk, you turn to NASDAQ. Here's the reality. Whether you own stocks directly or not, your money is already tied to these exchanges. If you have a 401k at work, chances are it's invested in funds that hold shares listed on the NYSE or NASDAQ. If you're counting on Social Security to help in retirement, guess what? Even the government's trust funds are partly connected to the health of the stock market. And if you've got a college savings plan for your kids, like a 529 plan, it's also invested in the very same markets. So when these exchanges rise, Americans across the country quietly breathe easier. When they crash, the fear hits everyone, not just Wall Street traders. Think back to 2008, the financial crisis. The NYSE and NASDAQ crashed hard, wiping out trillions of dollars in household wealth. Ordinary families saw their retirement accounts cut in half, college savings evaporate, and home values sink while Wall Street bankers were making headlines for bailouts. That moment proved just how deeply these exchanges are woven into the fabric of American life. It wasn't just numbers on a screen. It was a dad postponing retirement, a mom working extra shifts, and young couples delaying buying their first home. The fate of the average American family was being written on the ticker tapes of NYSE and NASDAQ. Today, every headline you read and every alert you get on your phone about markets rising or stocks tanking is usually tied back to NYSE and NASDAQ. When the NASDAQ rallies, tech workers in places like Silicon Valley feel richer because their stock options suddenly look golden. When the NYSE climbs, retirees across Florida feel more secure because their dividend stocks keep paying. This is why you'll hear terms like bull market and bear market dominate dinner conversations, because these exchanges literally set the tone for how confident or fearful Americans feel about their money. It's not just numbers. It's emotions, dreams, and decisions being pushed back and forth by NYSE and NASDAQ every single day. Here's the decoder. NYSE represents tradition, trust, and stability, while NASDAQ represents innovation, speed, and growth. Think of the NYSE like a steady old oak tree. It doesn't move fast, but it stands strong for decades. NASDAQ, on the other hand, is like a young rocket. It can launch you to the moon or crash in flames depending on the fuel. Smart American investors learn to balance both, putting part of their portfolio in safe, dividend-paying NYSE stocks while also betting on the future with NASDAQ tech plays. That balance is the secret sauce to building wealth in today's unpredictable world. One of the biggest powers these exchanges have is deciding which companies get listed. When a company wants to go public, it chooses between the NYSE and NASDAQ to launch its IPO, its initial public offering. This choice isn't random. It's a signal. A company that lists on the NYSE is saying, "We're solid, we're traditional, we belong with the big steady names." But when a company lists on NASDAQ, it's shouting, "We're innovators, we're disruptive, we're ready to grow fast." For investors like you and me, that listing decision tells us a lot about the DNA of that business before we even buy a single share. Take Facebook as an example. When it went public in 2012, it chose NASDAQ, joining the lineup of other tech disruptors. Meanwhile, big established companies like Visa, AT&T, or ExxonMobil usually choose the NYSE. This split shows you something powerful. The exchange a company picks is like its personality test. It's telling investors whether it's a steady grandpa stock or a fast-moving startup rocket. That's why when you hear about a hot IPO, the first question should always be, is it NYSE or NASDAQ? Because that single detail reveals how risky or how safe the journey might be. Every exchange tells a story, and sometimes that story turns into a bubble. In the late 1990s, NASDAQ became the center of the dot-com boom, with internet companies raising billions even before they made $1 in profit. Stocks of companies with no real product or business plan skyrocketed just because they had .com in their name. But when the bubble burst in 2000, the NASDAQ lost nearly 80% of its value, and millions of Americans saw their portfolios wiped out. This showed that while NASDAQ offers huge upside, it can also deliver some of the most painful crashes in market history. Meanwhile, the NYSE has had its share of history-shaping crashes too. Black Monday in 1987, when the Dow Jones fell 22% in a single day, happened right on the NYSE floor. The financial crisis of 2008 also slammed NYSE-listed giants like Bank of America and General Motors, shaking the entire country. These events remind us that no exchange is safe from panic and fear. But here's the difference. While NASDAQ tends to crash from overhype, NYSE crashes usually come from deep financial stress in the economy. That's why investors pay attention not just to what's rising, but why it's rising, and on which exchange. Wall Street isn't just about charts and numbers. It's about people's lives. When companies list on the NYSE or NASDAQ, they raise billions that fund new offices, factories, and jobs across America. Think about it. When Tesla sold shares on NASDAQ, that money helped build factories in Texas and Nevada, creating thousands of American jobs. When a company like Johnson & Johnson raises funds on the NYSE, it can invest more in research that produces medicines for families nationwide. This is why these exchanges aren't just trading floors. They're engines of the American economy. And it doesn't stop with jobs. These exchanges even shape American politics. When the market crashes, presidents give speeches, Congress debates bailouts, and the Federal Reserve steps in. Wall Street's health can decide whether voters feel confident or scared about the future. Remember 2008? The NYSE crash fueled anger about banks, and that wave of frustration shaped U.S. politics for years. That's why whenever you see the Dow Jones or NASDAQ trending on the news, it's not just finance, it's national psychology. So here's the big takeaway. NYSE and NASDAQ are not just buildings in New York. They're signals, they're stories, they're reflections of America itself. When you see companies choosing between the two, when you hear about bubbles or crashes, remember this isn't just Wall Street, it's Main Street. It's your 401k, your retirement, your kid's college fund, your mortgage. Every tick up or down on those exchanges eventually shows up in the lives of everyday Americans. That's why decoding these markets is not optional. It's a financial survival skill. Now, I'm not saying you need to become a Wall Street trader or spend all day staring at stock charts, but you do need awareness. If you know that a company is on NASDAQ, you understand it's likely to be more volatile, but also full of growth potential. If it's on the NYSE, you know it's probably more stable, but slower moving. With this decoder in your pocket, you can make smarter choices about your 401k investments, your Roth IRA, or even which stocks you choose to follow. Knowledge is the real wealth because it protects the money you've worked so hard to earn. So the next time you hear, the Dow is up or NASDAQ is down, don't just shrug it off. Understand that these movements are the pulse of the American economy. And by learning to decode them, you gain control over your financial story. Remember, money isn't just about working harder. It's about playing smarter. And here at the Finance Decoder, my mission is to make sure you never feel lost in the financial maze again. Stay curious, stay disciplined, and keep decoding. Because your financial freedom is worth every bit of it.